in listen-only mode.
Jeff, you're live.
All right. Hello, everybody. Hope you're doing well. Seems to be a little bit of an issue with the camera today, but I am waving and smiling, so I hope you're well. Welcome. Thanks for coming to the event today. It's good to see you. If you're joining us on YouTube, hello. If you haven't already, subscribe to the channel. It helps a great deal. We appreciate it. And make sure to like. And if you have any questions, we'll be monitoring those as well. Be sure to ask them in the questions area. So, without further ado, my name is Jeff Gibby. I'm going to kick us off by reading a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Also, just as a side note, today we're not going to recommend any securities. We're not in the business of recommending securities. We're not paid to endorse any specific security. No investment advice. So without further ado, we'll go ahead and get started. Steve Primo is our special guest today. He started on the Pacific Trading Exchange. The strategy that he's going to talk about today, he actually used and employed and has been using for about 50 years. So it's very, very well time tested. He's been using it for a while. What I want to say about Steve before we kind of turn our time over to him is he's a great presenter. I absolutely love when he comes in and talks about stuff. He's very simple. It's very understandable. It's very, very easy for me to digest exactly what he's saying and understand what he's talking about. I think that's an important skill to have, especially when you're trying to learn something and especially when you're trying to teach something. So without further ado, let's go ahead and get you started. Steve, how are you doing?
Hi, great, Jeff. Thank you.
Yeah, absolutely. I'm going to go ahead and make you the presenter. I'll make sure we can see your screen before we kind of let you roll.
Okay, let me see if I'm doing this correctly. Is that okay? Can you see everything all right?
First try. Actually, we tested this before we started, but it's still working, so it's great.
Great.
All right.
Okay,
I'm going to go ahead and mute my mic. It's all you now.
Great. Thanks to Jeff, everyone at Metastock, and thanks to all of you for attending on this Wednesday. I have a great presentation for you. In fact, I'm going to be talking about a strategy that I've literally been trading for nearly 5 decades. I first learned this strategy when I was on the trading floor at the Pacific Stock Exchange. I was given this by my mentors, and I really think it's helped sustain me now for the past 5 years. I use it every day. I used it today, and it's a great method because it doesn't matter what market you trade. It doesn't matter what time frame. It's easily transferable. So you'll see that in just a few minutes. For example, I want to share with you this chart here. Let's look at this chart in Charter. All right, this is why traders have difficulty trading. They'll see something like this and say, hey, well, we're going up, so I guess I should be a buyer. And then you step in and then this happens, right? And you see all the number of down closing days, 1, 2, 3, 4, 5. And you say to yourself, wow, that's a bad sign. Looks like we're in a downtrend. We have a bearish engulfing pattern right here. I think maybe I should get out of my losing position, or maybe I shouldn't buy now. Maybe I should go short. You know, this is what always messes up traders because they're really not sure exactly what to do. Well, what I'm going to be doing today is I'm going to actually be sharing the first 2 rules of this method I've been trading for nearly 5 decades. And just looking at this chart alone with the information I'm going to be giving you, the first rule would have told you right off the bat that the overall trend is up. So therefore, you wouldn't have to worry about going short or looking at negative candlestick patterns. You would know that, well, if the overall trend is up, I should be looking at this from a buyer's bias. And the second rule I'll share with you, that is the 2 rules of the method, would have told you that the short-term trend is up. So there's no need to look at different time frames. I know a lot of people like to look at a higher time frame and a smaller time frame to see. No, you would have known just by these 2 rules that the overall and the short-term trend were in sync. So that is a high probability environment for a buy setup. Now the remaining 2 rules of the strategy, there's only 2 rules left, actually generated a buy signal right here. And in the next week, you would have seen the stock jump up 65 points. So this is how simple it is to trade this when you know how powerful this method is. And this is what we're going to be talking about today, a strategy that I've literally been trading for nearly 5 decades. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. As Jeff said, I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. If you're not familiar with what a specialist is, because there aren't a lot of them around these days with the advent of electronic trading and everything, in the old days, a specialist is someone who made markets in roughly about 50 or 60 stocks. So in the old days, if you wanted to buy a stock, let's say IBM, what you would do is you'd call your stockbroker. Your stockbroker in turn would call the floor broker on the trading floor. He would take the order to buy 100 shares of IBM, and then he would walk up to the trader who specialized in making a market in IBM. So that's what I did. In fact, IBM was one of the stocks I made a market in. I made a market in waste management, US Air. And I did that during the crash of 87 and the bull market that followed. And after in the 90s, when I left the floor, I managed money and I started to trade my own account. And about 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to start an educational company to educate traders, because I feel that's really the main thing that's missing with most traders. It's not because they have a faulty method or they haven't been trading long enough or you don't have enough knowledge. It's really you just don't have the correct information in terms of what you need to know about the markets in terms of consistency. So that's our goal, to educate you so that you can really know what works in terms of consistency and what doesn't. And you'll see that in today's educational class. Now, before we begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, whenever I do a presentation or webinar, people always ask, well, is there any way to get more information about you? Yes, there is. You can follow us on Twitter or X, however you like to call it. Every day I post anywhere from 5 to 7 different snapshots of signals our strategies or techniques have generated. I also post little bits of financial wisdom. So there's lots of great free education you can get on a daily basis. There's our handle right there. You might want to copy that down. It's an abbreviation for Specialist Trading at SPCLST. TRADG. Now remember, as I stated in the opening statements, we are an educational company. So this means basically, I'm not going to tell you what I think the market's going to be doing. I'm not going to tell you what I think the best stock is to buy or what the perfect time frame is, because that's up to you to decide. When you have this education in your hands, then you automatically know what is in an uptrend, what's in a downtrend, what the market should be doing, what it's not going to be doing, what the best time frame is. So that's our goal, to provide you with all this so that you can ultimately make your own decisions. That's the basic philosophy behind all of our education at Specialist Trading, okay? All right, with that said, let's begin. Oh, just one announcement. I know you may have some questions. Please kindly write them down. I'll take the questions at the end. I believe Jeff will read them to me or so, and I'll take them at the end. So we'll go through every one, and you'll be able to answer each and every one, okay? All right, so what we're going to be talking about today, the method I've been trading for nearly 5 decades, is strategy number 4. Now, let me share with you some of the highlights of this particular method. It's a pattern recognition strategy. So it's based on a pattern that repeats itself over and over again in virtually any market and in any time frame. So there's no need to switch. I've seen a lot of webinars before of other teachers in the past that say, well, if you want to trade stocks, you have to use this strategy. But if you want to use the same concept and trade crypto or trade currency pairs, you have to use another strategy. That's the beauty of strategy 4. You can transfer it onto any market and any time frame. It makes no difference. The rules don't change. Now, it's originally designed for traders looking to catch momentum. When I first started trading this on the trading floor, I was in and out of trades in a matter of minutes because, on the trading floor, you're buying something and selling it 2 minutes later and vice versa. Well, we realized that not everyone trades that way. So we've developed ways in the method to have you trade at virtually any time frame, to stay in the trade much longer than 5 minutes. I mean, you can stay in the trade if you like that long, but you can stay in the trade days, weeks, even months if you like. All right? Okay. Now it only uses one indicator. I'm going to share with you what that is in just a few minutes. So it's very simple and very easy to learn. The highlights to strategy number 4. The first highlight and the first advantage is it's extremely consistent. Now I know a lot of people think consistency means that, well, that means it wins a lot. It's got a lot of winners. That's not really what consistency means. Consistent means that it is aware that it will have losses from time to time. That's okay. But a consistent method is one that's able to recoup the loss, oftentimes on the very next setup. So when you have a consistent method, it has a 2 steps forward, 1 step back approach. And that's what you want to see in your profit and loss statement, a nice upward slope in your P&L chart. You don't want to see this kind of chart that is going straight up and then straight down, straight up and then straight down like a roller coaster. That's more of a method that is more akin to gambling, the way gamblers do, like, oh, I made a huge bet, I made a huge score, and then they give it all back on the next bet, right? No, what you want, if you want to trade like a professional trader, is nice consistency in your profit and loss statement. Now, another advantage to trading strategy 4 is that it makes you a part of the process. We teach you what this means in the course because there are different ways to trade it if you'd like. If you'd like to become a part of the process, you want to trade it more aggressively or more conservatively, we show you how to do that. And lastly, it's designed to be as simple as possible. As I stated, it only has 4 rules, and I'm sharing with you half of them today. You're going to get 2 of the first rules of the method, and then that's it. The remaining portion of the strategy we can't divulge right now. It wouldn't be fair to our thousands of students who have purchased this around the world who are now trading with it if I gave away all the rules for free. But you'll get the first 2 portions of the rules right away. Okay, so let's get into it. What are the first 2 rules of strategy 4? And one of the things I want to state about this, as I said, it's extremely, extremely simple. In fact, I'm sure a lot of you will say, well, this is too easy. I mean, it's just, how can something work based off this? This is simpler than Trading 101. But it does work. And trust me, I use this each and every day. All right, rule number 1. Buy or sell signals can only be entered. If it's a buy, it must be above the 50-period moving average, or if it's a sell, it must be below the 50-period moving average. That's it, okay? So if we see that the majority of price bars are above the 50-period moving average, the market is telling us, not me, not some guy in a webinar, not some guy on TV, or not some earnings report. The market, the very thing you're trading, is telling you the overall trend is up. So we always want to be in sync with the overall trend because the odds will be in our favor. So if price bars are above, the more the better. But all you really need is 1 for the signal to take place, and I'll show you that in just a few minutes. But if price bars are above, you know that the overall trend is down. Or I should say is up, I'm sorry. And if, here we go, I jumped ahead of the gun. If price bars are below, you know the overall trend is down. It's that simple. And we will never be buying below the 50-period moving average. Now, if you think this is just too basic and too simple and it can't work, well, I dare you, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason you had losses was because you were buying below the 50-period moving average and you were selling or going short above the 50-period moving average. Now, obviously, if you have a nice trade and you have a nice win and you say, hey, I want to take profits, sure, you're going to be above the 50-period moving average. But we're not talking about exiting with a profit or with a gain. We're talking about going short. If you went short and you were above the 50, the odds are it won't work. Now, sure, it works every once in a while. I'm not going to tell you that it doesn't work. But it's similar to the slot machines. Now, if you've ever gone to Las Vegas and played the slot machines, you'll know that they have the worst odds of any gambling game in the entire city. Why? Because they're designed to keep you there. If you happen to have a jackpot and you say, God, this is fantastic, I'm a winner, most likely if you stay there, you're going to give it all back. They know that. So they make everything simple. They give you a free room. They give you lots of perks and advantages so that you'll stay and you'll give it all back, especially with the slot machines. It's the same way with selling short above the 50 and buying below the 50. Sure, every once in a while you may hit a huge score, a great trade, but if you continue to do that, take it from someone who first started trading that way. When I first started trading, okay, I would have a nice win every once in a while and I eventually give it all back. Remember, that's not what a consistent professional trader does. Consistent trader has a 2-step forward, 1-step back approach. All right, so that's rule number 1. Now rule number 2. Buy and sell signal bars must close, if it's a buy signal, must close in the top 25% of its range. If it's a sell signal, that bar must close in the bottom 25% of its range. All right, so what exactly do we mean here? I know it's kind of confusing. Well, see these bars here? If this is a buy, it must close in the top portion of its range. Why? Because the market, once again, not me, the market is telling you that the short-term trend is up and it wants to continue going higher. So it did go higher for the short term. Now we had a sell-off here, but what do we have? Another bar that is a buy signal closing in the top 25%. And look what happened. So now you have the short term in sync with the overall trend. The same thing works for the downside. Okay, we have a bar closing here in the bottom 25%, a sell signal. It's below the 50-period moving average. And look what happens. So you see how simple this is. There's no reason to look at two different time frames. I mean, if you want to, you can. I'm not going to sit here and telling you you can't trade that way. But take it from someone who's been trading for nearly 5 decades. I personally have found no consistency in using that type of method where I look at a time frame to tell me what to do on the lower time frame before I can do anything. They have to be in sync. All right. So I've never found any consistency in using that. So it's up to you. It's so much simpler just to use the 50-period moving average and to look for bars that close in the top or bottom 25% of their range. Now there you have the first 2 rules of strategy number 4. This is how simple it is. The remaining 2 rules, I'm sorry to say I can't divulge because they show you how to identify that pattern. But let's share with you some recent strategy number 4 examples, and you'll see these 2 rules in action, and you'll see how simple it is to actually apply. All right, let's look at this example in PCAR, Packer. Okay, very common chart here in a range market, right? And we've all been taught trading 101. When a market is in a range market, you don't really want to do anything. That's where you get whipsaws. You buy and then it goes down, you sell and it goes up, right? So it's best to stay away from a range market or wait till it breaks out of that range one way or another, right? This is once again what we've all been taught, all right? Unfortunately, there's not a lot of consistency in that, especially when you use the first 2 rules I taught. Because even though this might look like it's in a range market, what's the first rule? To apply the 50-period moving average. And now we ask ourselves, where is price in relation to that 50-period moving average? Price is above, right? So the overall trend is up. Even though you may think you're in a range market, the market, not me, the market is telling you the overall trend is up. So there are pretty good odds I'm going to go higher. All right. Now we look for bars that close in the top 25% because the overall trend is up. And we see here that we have one here, we have another one here, and that's about it. But remember, we can't just say, okay, well, we have to buy when we see these bars. We need the remaining 2 rules of the strategy to be met, and they were met right here on this bar. So this generated a strategy number 4 buy signal. Now, nothing much happened for the next 2 bars, but look what happened after that. Coming into this month, it was up 12 points. So this is how simple it is to apply this. Now, remember, in the course, we teach you exact entry, we teach you stop placement, we teach you different exit levels for you to decide how you want to trade it. We have an advanced way to trade it. We have an aggressive way to trade it. We also have a conservative way to trade it. But I'm just sharing with you how simple this process is. Let's look at this example. Now, this is a little bit more advanced because price is oscillating above the 50, then it goes below. Then we have 1 bar above, 1 bar below, kind of right on the 50-period moving average, 1 bar below, and then back up. But all you really need is for that bar to close above and for the remaining rules to be met to have a valid strategy number 4 signal. Now, we actually have 2 right here. Now, this was in ANSS, and as you can see, it shot up 18 points just immediately after the second signal. So roughly in a couple of weeks, you could have potentially captured 18 points. Now, here's an example of what I mean by consistency, because as I said earlier, I'm not going to sit here and tell you that every setup works. That's just not the way life happens. I mean, today I had, let me see, intraday trading, I believe I had 4 trades. I had, my very first trade was a break even. My second trade was a loss. My last 2 trades were winners. So that's consistency. All right. The same thing works in any market in any time frame. As you see here, we had a buy signal generated. But look what happened initially after that. It went in the wrong way. So using our standard stop loss placement, you would have basically lost 3 or 4 points. Okay. Now at this point, this is what most traders do. They say, hey, this stuff doesn't work. Gosh, you know, and a lot of traders like to go sulk and like to have a little pity party and just feel sorry for themselves. But when you're doing that, what often happens is you miss the very next setup. Now this next setup you could have taken and potentially captured that 4 points that you lost, as well as a total of 14 more, because it went up 18 points in the next couple of weeks. So this is a perfect example of what we mean by consistency. We can have some small losses here and there, but look at how we were able to consistently make it back and then some potentially. Now, here's a great example of going short in Micron. Now, someone looking at this would say, Steve, how can I go short? Look at how far down we've gone. We've gone straight down, and now you're asking me to go short down here? Well, listen, you don't have to take this if you don't want to, but this was a valid strategy number 4 sell signal. We're below the 50-period moving average. We closed in the bottom 25%. Now, even though we had a lot of others that closed in the bottom 25%, this is the only one that met all of the rules. And look at it. Immediately went down. Now, if you covered your short, which you could have taken a nice profit, or stayed short, you had another chance to get short, and you could have potentially captured 20 points. Here's an example of what confuses traders in NVIDIA. As you can see here, on a short-term basis, the stock was going up, then it looks like it's going down, but is it really? All we have to do is firstly add the 50-period moving average, and then we ask ourselves, where is price in relation to the 50? Well, all price bars are above. So the overall trend is up. Even though the last week has seen a sell-off, that's a buying opportunity because the overall trend is still up. And now we look for bars that close in the top 25%. Well, we have one here. We have another one here. We have another one here. But which one was a buy signal? Well, actually only this one was. This one met all of the rules and requirements of the pattern. And look what happened. It went up 20 points coming into mid-month of this month, October. Okay, this was all done without the aid of any news, without the aid of having to go to a signal service or listen to some guy in a chat room. You can do it on your own if you have the proper information. As I said earlier, that's our goal as a mentor, to provide you with this so that you make your own decisions. There's no reason to come to our website to figure out what to do once you've taken the course. We want to give it to you and then mentor you and stay with you until you fully understand the process, and then you're free to trade it the way you'd like. That's what trading is really all about. All right, here we have a more advanced sell signal. Price was originally above the 50, but we're here on this bar, we have a real obvious close below, and we close in the bottom 25%. So we're below the 50, and we close in the bottom 25%. This is a valid strategy 4 signal. The remaining requirements were met, and the stock quickly fell. You could have taken your profits, or if you wanted to stay in, well, guess what? It started to go against you, but we're still below the 50. So this is not a change in trend. This is a selling opportunity. And if you had covered your short, you could have had 2 chances to go short again and potentially captured 20, 25 points. Okay, another example of what really confuses traders when they're trying to figure out where they are in relation to what the market wants to do. Now, obviously, looking at this chart in Lulu, someone would say, well, Steve, we're going up. But then, wow, look at all the sell down bars here, closing down. We're going down, I guess. Oops, I guess we're going back up. Time to get long. Oops, I guess we're going back down. Okay, this is why traders have such a confusing time. They don't really have any idea of what the stock wants to do. But if you really get out of your own way and simplify things, this is actually very simple, because what's the first thing we teach you? Apply the 50-period moving average. Now ask yourself, where is price in relation to that? Well, the majority of the bars are above. So all of these sell-offs were both buying opportunities. So when the market sold off here, we're looking for bars that close in the top 25%, but they didn't. Now in this next rally, we don't have a bar here in the bottom or top 25%. And now that it's sold off again, guess what? Here we have a bar that closes in the top 25%. It's above the 50-period moving average, and the remaining rules of the method have been met. So you have a valid strategy number 4 signal. Now this was just about not even a month ago, and look what happened. 32 points in less than 2 weeks. You see, the market is always telling you what it wants to do. Here's the only trouble. We're always trained to listen to something else, like some guy on TV or some economic report or some earnings report or some trading guru or some guy in a webinar, right? We were never trained to learn how to listen to the market. I know when I first started, I wasn't, and that's why I struggled my first year or two, because I just couldn't figure out what was going on. I was taught to look at the earnings. I had to know what the earnings were, and the earning estimates were in roughly about 50 or 60 stocks that I made markets in. I looked at all the fundamental news about the economy and what was going on with the world. I looked at all the charts and graphs. I had maybe about 20 or 30 indicators plotted on them. My trading was so overcomplicated, it's no wonder that I couldn't make ends meet. My mentors saw how much I was struggling. These were specialists on the floor themselves. And they took me aside and said, Steve, listen, there's no reason to overcomplicate your trading. Anyone can do that. It doesn't take a lot of character to put on a ton of indicators on your screen or a ton of moving averages. It doesn't take a lot of character to follow every news source, every bit of fundamental news, earnings, economic reports. Anyone can do that. You can be trading for 2 weeks and do that, which is exactly what I did. I said, but it takes more character to simplify your trading and release and let go of all these things and learn how to listen to the main source, which is what you're looking at, the chart. So I had a difficult time doing this at first, but once I finally let go, I saw, wow, this is actually pretty simple. I just need to look at the 50-period moving average and then look for this pattern, and that's it. And this is what has sustained me, I believe, for the past 47 years. So we had a really nice trade there in Lulu. Students of ours who are strategy number 4 students who took this signal had a really nice gain in Lulu. In fact, 32 points in just less than 2 weeks. All right, here's an example of a sell in Marriott. All right. Here's where most traders think, hey, we're in an uptrend. Look how many days we keep closing up. We're going higher. And for one day, we did close above, but that's not enough. There were no signals generated. And on the very next bar, we closed in the bottom 25%, and we closed below the 50-period moving average. So this is a valid strategy for sell signal. Now, let's say you took a profit. Okay, well, that would be great. You made a nice 5 points. That's not bad. But let's say you stayed in the trade. You stayed in the trade, and look what happened. Well, we got a reverse signal. Now, things have changed. We are now closing just barely above the 50. We closed near or at the very top 25% of the bar, and the remaining rules are met in the pattern. So now what we tell our students is, listen, the market is telling you what it wants to do. You should stop and reverse. So basically, you stop yourself out. You take a small loss of 2 points because you would have sold somewhere here and gotten back in. But now you're long. And guess what? You could have potentially captured 35 points coming into the middle of October. Now, don't you think you would have liked to have lost 35 to make potentially, lost 2 to make potentially 35? That's what we mean by consistency. Sure, you will have losses from time to time. That's okay, because strategy 4 is extremely consistent and it's always giving you chances to get back in. In fact, if you missed this chance right here, well, you would have been stopped out with a larger loss, but you would have had a chance roughly to make about a good, let's say 15 or 20 points on the way up if you had taken this signal right here. All right, we're obviously in an uptrend, right? Correct? We're going up, right? This is textbook higher highs, higher lows, right? No, this is why students fail. You have to apply the 50-period moving average first. Where is price in relation to the 50? It's below. So you're not in an uptrend. The overall trend is down. And will we be ever buying below the 50-period moving average? No. As I said earlier, sure, every once in a while you'll have a fantastic trade where you buy below the 50 and it works like crazy, right? But if you do that long enough, just like the slot machines, you'll eventually give it all back. Take it from someone who did that over 4 decades ago. It just won't sustain you. You want consistency in your trading. You want an edge. And the edge is only buy above the 50. And if you're below, as we are here in this example in FANG, you only want to be going short. So now we want to look for bars that close in the bottom 25%. And we have one right here. And it met all of the rules, the remaining rules of the strategy. So this is a sell signal. And look what happened. Okay, what happened to the nice rally that you originally thought we were in an uptrend, right? Okay, now you could have taken a nice profit here and gotten short again and made some more profits. Now this is a little bit more advanced signal here in team because we're oscillating above, below, above, below. Okay, so this is a little bit more difficult. We would only suggest more advanced traders trade this. But remember, all you really need is one bar closing above or below depending on the signal. And here we had just one bar closing above the 50 that closed in the top 25%. Even though it closed lower, it's in the top 25%. And it met all the requirements that were left in the strategy. So it actually is a valid buy signal, even though it appears that nothing is happening here. And this was in team. And look what happened in the next week, 35 points to the upside. Now, a lot of traders look back. They love to play the game, the blame game, and say to themselves, "Gosh, looking at this, how come I couldn't take advantage of this? Gosh, I always miss the big moves like this." Well, now we're giving you an edge so that you don't have to miss. A lot of traders say, "How come I wouldn't have known this was going higher like way back here?" Well, we don't know it's how high it's going to go, but if you applied the 50-period moving average, you would have known well in advance that at least the overall trend was up. And even when we sold off here, that this was a buying opportunity. Now, if you knew the rules to strategy number 4, you would have seen that you had a couple of chances to buy where you could have potentially captured 38 points. Here's another example. Looking at Lind. Okay, same exact type of example. Traders love to look back and say, "Gosh, I missed this. How did I miss this? This would have been a great buy here, and I just didn't know it was going up." Well, actually, you may have not known how high it was going up, but once you applied the 50, you knew the overall trend was up. I mean, look at every time it sold off, that was a buying opportunity. Sells off, a buying opportunity. Sell off, a buying opportunity. And we apply the rules and requirements to strategy number 4, look at how many chances it gave you to purchase. Had you purchased the first 2 signals right here and continued to hold on up until this last couple of weeks, you could have potentially captured 40 points just in the last couple of months with strategy number 4. Another advanced signal here, this time in workday. As we see here, the majority of the price bars are below. So at this point, we're looking for sell signals. Here's a couple of bars that closed in the bottom, 25%. Here's another one, but they weren't sell signals. But guess what? This one was a buy signal. It closed above the 50 and it closed near the high of its range. So that's a valid buy signal with the other 2 remaining rules met. And the stock was up 45 points. Now look how a week or so after the buy signal was generated, how it gapped up. Now, obviously, this gapped up off of some news, some fundamental announcement, something that happened in the market. And isn't it funny how a full week prior to that, more than a week, a buy signal was generated? That's how sensitive strategy 4 is. Just based off market momentum and this pattern, it oftentimes will generate these great signals before a big move because remember, as I said earlier, it's designed to catch and identify momentum oftentimes before the rest of the world sees that there's even momentum in the trade. So that's one of the great things about strategy number 4. Okay, we're above the 50-period moving average. We have all these bars closing in the top 25%. 1, 2, 3, 4, 5. But the only one that met the remaining rules of strategy 4 was this one. So we have a buy signal here in charter. This is the chart we looked at the opening of the presentation. And guess what happened in the next week? 65 points to the upside. Once again, obviously there was some news that came out that caused this to gap up like that. Isn't it funny how 3 days before that gap up, strategy 4 was already identifying momentum to the upside. This is why we say this is an edge you'll have if you only buy above the 50 and only go short below the 50. All right, another example of how traders say, "Gosh, I bought this stock and I stayed in and it started to bounce right here." This is a weekly chart, by the way, of Biogen. It started to bounce, so I thought, "Gosh, I guess it's going to be okay." That guy in that chat room said it bottomed out, so I bought some more and now I'm really losing a lot of money. All right, one of the main things we hear from our initial students, because they're always telling us, "I just don't feel like I'm in sync with the market." Well, the easiest way to be in sync with the market is to apply the 50-period moving average. So you would have known right off the bat that there's no reason to be buying the 50-period move. Buying Biogen because the 50-period moving average is above. So even when we rallied here, that was a selling opportunity. Even off this bounce where you may have bought more, that was actually a selling opportunity. So we have a lot of students that don't like to go short either by buying puts or some option spread or shorting the stock. So we tell them, listen, you can use, if you're in a position and you don't know what to do, you can use a sell signal as your exit signal. So let's say you were along this and you felt that you were doing very well. Well, look at all the chances you had to get out before you could have potentially taken a 75-point loss. Now, granted, if you took this signal or any of these signals right here in the beginning, you could have potentially had a 75-point gain. It all depends on what side of the fence you're on. Either way, strategy 4 could have really helped you. Okay, two signals generated. You'll see that every once in a while where we have these two signals right next to each other. That's a really good sign that there's a high level of consistency. And look what happened. The stock was up 85 points. This is Meta, by the way. 85 points coming into the beginning of this month. All right, here's a perfect example of how students come to us and say, Steve, you know, I always look at support and resistance. I was always taught, I took that $10,000 course on support and resistance on how they say something is bottom out at major support, how things work here. Well, listen, once again, we're not here to tell you what not to trade. I can only give you my personal experience from nearly 5 decades of trading. And when I was on the floor, I used to trade with the institutions and the big market makers. And in my opinion, they had the worst trading record out of any traders I traded with. All the brokerage houses I traded with were the worst were always the institutions because they made the support and the resistance with their orders, but they had the worst record. So I would never bank on them, but it's up to you. Now, someone could say, well, Steve, how can you go against this? This is major support here. It bottomed out, and look at how high the stock has rallied since it hit that support. Well, once again, the first thing we teach our students is not to look at support and resistance because that's very subjective. One trader's support is another trader's resistance. What we look at is, are we in sync with the overall trend? And if we apply our first rule, we see that at this point, the overall trend told us it wanted to go lower. So until it has a couple of closes above, this is a selling opportunity. Now, looking at it when it first initially went below, we had some really nice sell signals we could have taken advantage of, and we could have taken a profit there and sat back and waited for some more sell signals that were generated, 2 more right here, and look what happened. So this is why we say, sure, every once in a while you'll say, Steve, look at this really good bounce here. I would have made a lot of money. Yeah, but if you had held on thinking it was going to come back, you would have given it all back. And so this is why it's not an edge to buy below the 50-period moving average. All right, here's a chart in TMUS, T-Mobile. All right, once again, traders looking at this would say, how did I miss this? Gosh, how did I know it was going to go higher? I mean, you know, there were no signals. Well, actually, the market was giving you a signal, not me, but the market. If you applied the 50, it was telling you way back here. By the way, this is a monthly chart. It was telling you way back here, roughly 11 years ago, that the overall trend was up. Okay, so you would have known that. Well, at least you know this wants to go higher. And then once you applied strategy number 4, look at all the chances you were given to purchase T-Mobile. And potentially, had you taken the first signals in 2014 and you held on until today, well, that's roughly about 195 points you could have potentially captured. You're not looking at any fundamental news. You don't care about inner workings of the company or who the CEO is. It really doesn't matter. You're not concerned with what's going on economically. You're only looking at the source, which is the chart in front of you. All right, we're in an uptrend again, right? Okay, you've already heard this trick before. No, we're in a downtrend. Okay, obviously this is a trick once again. So the first thing I'm training you to do is apply the 50-period moving average. Then you look for bars that close in the bottom 25%. These are sell signals. Here's one here. I would have taken that profit right away when it gapped down. And you've given a second chance, and look what happened here. And then you were given 3 and 4 more chances to go short. All right. Potentially, you could have captured over 200 points trading these signals. This is how simple it is when you're in sync with trading the market. Now, I know not everyone trades stocks, so here is an hourly chart of the Canadian dollar. Same process. Absolutely nothing changes just because we're looking at an entirely different time frame and an entirely different market. The same process. We apply the 50-period moving average, and right at this point, right here, we knew that the Canadian dollar on an hourly frame wanted to go higher. So at that point, we start looking for bars that close in the top 25%. But guess what? It's easy with Metastock. It just automatically, they come up there. And you'll see that you could have potentially captured over 300 pips in the next week or so. Now, if you like to trade daily bars, here's a daily bar of the Swiss franc. Okay. Obviously, we're in an uptrend, right? Well, you're not going to fall for that again, right? No, we're in a downtrend. This is a selling opportunity. We had one close above, not enough to tell us that we're going higher. And look, and then we close below, right? The last 2 bars. And in this bar, we're in the bottom 25%. So that's a valid strategy number 4 sell signal. All the remaining 2 requirements have been met. And then look what happened in the following days. The Swiss franc fell out of bed, and you could have potentially captured upwards of 625 pips had you stayed in coming into October. Okay, we've given you tons of examples in different markets, different time frames. Let's recap. Remember, strategy number 4 is a pattern recognition strategy. We look for a pattern that repeats itself over and over again in virtually any market and in any time frame. It's designed for traders looking to catch momentum, and oftentimes, because of the pattern, it will signal there's going to be some strong momentum before it's even identified on the chart, before the chart even displays it. That's the beauty. You're getting in well before a lot of the traders get in, okay? You can apply it to all markets and all time frames. Now, as I said before, the advantages to trading strategy number 4 is that it's extremely consistent. Remember, consistent is probably not the same definition that you think it is. Consistency is an awareness of losses. You will have losses from time to time, as I showed you in a couple of examples, but that's okay because a consistent method is one that's able to recoup those losses, oftentimes on the very next signal, as you saw in a number of those examples. So that's what you want to be trading. I know there's a lot of fly-by-night methods that promise the world, and they have these great setups where they made tons of money. But a lot of them, they don't show you that they give it all back on the next signal. I'm sure you've all been there before. I know when I first started trading, I would make huge amounts of money, and then by the next month, I gave it all back. That's not really trading. In fact, that's more gambling. What you want to be doing is trading more like a professional gambler, which is extremely consistent. 2 steps forward, 1 step back. Now, the advantages to trading strategy 4 also is that it makes you a part of the process. We give you different variables for entry, different variables for exits, different variables for stop placement. And then you decide, because we know not every trader trades like the other trader. No 2 traders should ever trade alike. Everyone comes in with different risk parameters. People come in with different sizes of accounts. So someone having a huge amount of risk should not take on someone the same stop placement as someone who has very little small trading account and doesn't want to take a lot of risk at all. So you have to know where these variables are, and we teach you what they are in the course so that you can become a part of the process and decide for yourself. Also, it's designed to be as simple as possible. I mean, you probably saw the most difficult part of the strategy in the first 2 rules. That really is probably the most difficult part. It's really downhill after that. But you have to know how to identify the pattern, okay? So ask yourself, after all the examples I just shared with you, do you think strategy 4 can help your trading for the remainder of 2024? If you can believe it, we've only got a little more than 2 months left in the year. I know most traders start out the beginning of the year saying the same thing, making the same promises that this is going to be the year that turn things around. This is going to be the year I make all that extra income and I'll go on that dream vacation, or I'll have that addition for my house, or maybe I'll buy that car I've been wanting to buy. And then we never get there, right? I know what it's like. I've been there before. It's extremely frustrating and very depressing because you're putting in a lot of your hard-earned time and most especially money, and you're not seeing the type of results. I really, truly believe strategy 4 can help you. I honestly use it every day. So I know the type of results I'm seeing, and I really think it can help your trading for 2024. So because of that, we have a great special discount for all the people attending today. We're going to offer you our most consistent strategy, that's strategy number 4, at a great discount. You're going to get instant course access, detailed instruction. We'll tell you all the different variables for entry, exits, and stop placement so you can match your own persona and trade the way you want to. You'll get the automatic buy and sell arrow, so you'll be able to check your work. But remember, this is not a black box. You'll know exactly what denotes and makes the requirements for a strategy 4 signal to be generated. You'll get the complete course rules, a PDF, and remember, you can apply this to any market and any time frame. And along with this, you'll get educational correspondence. So here's the offer. Now, strategy 4 regular price is $5.99, which in and of itself, I believe, is still a steal. But we're going to discount that today down to $4.99. You're going to save $100. Think of it. For less than $500, you can be getting over 4 decades, nearly 5 decades of experience that I've been trading with, and someone to be there alongside of you, trading with you, so that I can answer any question that you may have. This is a great offer. It's a great way to turn your trading around, and I'll be there with you every step of the way. $4.99. You're going to save $100, but that's for a limited time only. So, I believe this is being recorded. You can watch the recording and look it over again at your own leisure, but don't sit on this because the price may go back up. Take charge of your trading for the very first time. You may notice that in the course, I said there's nothing here that you have to go to a chat room and find the signal service each and every day. There's nothing here where you have to listen to what the earnings are or find out what the economic reports are. No, this is all you taking charge of your trading for the very first time. You'll learn how to identify these setups and decide for yourself if you want to take the trade or not. Decide for yourself where you want to enter. Decide for yourself where you exit and place your stop. This is what makes a consistent trader, in my opinion. I've been trading now for nearly 5 decades, and the only traders I know who are still trading from my years on the trading floor are the ones that make their own trading decisions. They don't go to a signal service. They don't watch TV and find out what someone else is saying. They don't go to chat rooms or trading rooms. They have a plan in place, and they simply follow it. And so that's what we're trying to instill in you and all the people here today, to take charge of your trading. Start off 2025 in the right direction, okay? Start off strong and take charge of your trading for the very first time. Here's how to take advantage of this great discount. Contact Metastock. That's the, I would say, the link you can see right there. You can copy and paste that. I believe Jeff may be pasting that in the chat box. But the best thing I believe would be just to simply call them at 800-882-3040. Their trading consultants can help you. They can set you up with it, take your order over the phone, or answer any question that you may have, okay? Now, I'm going to leave this information up here. I believe I have a little bit more time. Jeff, if we have any questions, I don't know if we have any, but if we do have any questions, I'd be happy to answer them now. If you want to read them to me, I'm not sure where the question
Yeah, for sure. We have a couple. Jackie wants to know if you have a strategies 1 through 3 already.
Oh yeah, we do. We have strategies 1, 2, and 3. We actually have strategies up to strategy 10, but they are all for different types of traders. You know, some traders like 20, 30, 40 trades a day. Okay, other traders like maybe 1 trade a week. So they're all fit different parameters in different environments. But yeah, we have upwards at specialist trading different techniques and methods that go up past 10 or so actually as well.
Eunice Eunice wanted you to clarify what you meant by the top 25%
Yeah,
of the bar.
I'm sorry. I didn't go into that a lot because I wanted to really share the actual examples. But picture it this way. Look at any bar, and I don't care if it's a 5-minute bar or a monthly bar, okay? What you want to do is measure the top, the very extreme high of the bar to the very extreme low. Not the open and close like a lot of people do on candlesticks, but the extreme high down to the extreme low of the wick or the bar, okay? That's the range. Now you want to divide that range by 4 separate but equal parts, okay? Now divide it by 4 parts. Now if you close in that top quarter, that top 25%, that's what we mean by being in the top 25%. Now if you close in that bottom quarter, that's the bottom 25%, okay? Now, I know the signals and the up and down arrows are automatically generated on the platform, but I just want you to fully understand what the process is. You know, like, as I said, this is not a black box. So I hope that makes sense.
Yeah, it makes sense to me. Let me know if you need more clarification, Eunice. We have a question on whether or not this will work with Indian stocks.
Yeah, it doesn't matter because the strategy number 4 is not looking, it doesn't know what the Indian stock market is. It doesn't know what crypto is. It doesn't know what currency pair. It doesn't know what a 5-minute time frame is. It doesn't know what a monthly time frame is. It's just looking for this pattern. And this pattern repeats itself in any market or time frame. So yes, we've had Indian students that trade in the Indian markets, and we have people using it in Europe. We have people using it in Australia. It makes no difference because this pattern will repeat itself. But the pattern is just based on human nature. And so human nature is the same in any market in any time frame.
And it pairs nicely with Metastock too, because Metastock has 300 different exchanges that they
yeah, and you'll be able to find it anywhere.
Thomas wants to know, do you have a preferred time frame?
Well, yeah, you know, I'm not trying to be facetious, Thomas. I'm not trying to be arrogant or condescending, but the best time frame is the one that makes you the most comfortable. Because after teaching for the past 15 years, I have students that tell me, Steve, I love strategy 4. It works amazing. The best time frame is on a 15-minute time frame. I go, great. And then I have another student say, Steve, I love strategy 4. The best time frame is on a weekly time frame. So is one right and the other one wrong? No, it's that everyone comes to the market with different parameters. So you have to find out what time frame makes you feel the most. So obviously, if you're looking at a smaller time frame, you'll get a lot more signals because you'll have a lot more access to a lot more bars during the day. Whereas if you're looking at weekly bars, you'll have less signals, but maybe that's what you like. So it all depends. You have to fit your persona to that time frame, and then you'll be able to see the signals. But as we said earlier, as a mentor, we want you to make these decisions. We can't tell you that, oh yeah, the best time frame for one is better than the one for the other. No, the best one is the one that makes you feel the most comfortable.
All right. Another question that came in from Greg. Greg wants to know if you're dressing up for Halloween, and if so, what as?
I'm trying to dress this time as a ghoul. Usually I try to scare the kids in my neighborhood, but for the last couple of years, no one has come, so I don't know if I'll be dressing up at all.
Okay. I'm going to be dressing up as a middle-aged man.
Yeah.
All right. I'd like to point out I didn't ask that question.
Oh,
but
no,
I did.
Greg.
But I did do an interesting survey. I asked people, do you avoid, by the way, this is Greg, for those who don't know. I asked people, do you avoid trading on Halloween due to quote unquote ghosts in the machine? 83% said no, and 17% said yes. So there you go.
There you go.
Yeah, I've never, the only thing that I've told students before, there's actually no, I've never found any rhyme or reason or statistical advantage to not trading on a certain day or whatever. The only thing I have found out is that, and I was first taught this by my mentors, is never to short a dull market. So usually before holidays, the markets are extremely dull. But I've seen over time, and I don't have statistics to prove this, but over time, if you short a dull market, it rallies either at the end of the day or the next week. So it's not, I have seen that it really doesn't seem to work well.
Right on. Okay, that's the end of the question, Steve. I do want to talk a little bit about what's like included in the add-on and that kind of stuff.
Sure, by all means.
But before I do that, I do want to say thank you for coming in here and spending an hour with us. Appreciate it.
Thank you so much. Thank you for inviting me to speak once again. Thank you to you and Greg and everyone in attendance today. And I look forward to all of you becoming students of mine at Strategy 4.
Right on. Thanks, Steve.
Thank you.
Do this. I'm going to go ahead and make me the presenter. Starting to get used to this new interface, actually. And we'll just go ahead and share the screen here. And we'll talk, here's the box that actually was designed by our team here. Very, very nice looking box. I want to talk a little bit about how this integrates into Metastock and how it can kind of really help you with what you're doing and all that kind of stuff. So with the strategy number 4, Steve Primo, it includes everything that you need to run it. With Metastock, we have a scanning utility. It allows you to go in and scan the markets, any exchange you're interested in, whether it's here, India, London, Australia, whatever it might be. Scan any market that you want and just find the opportunities that have a buy signal. It's got an expert advisor that kind of lays out the buy and sell signals for you, explains in plain English what you should do with them. And in addition to that, Steve's actually recorded 12 training videos that come as part of it. So, and here are kind of a list. I'm not going to read all of these, but here's a list of all the training videos that are actually all included here. And this is part of the package, part of the one-time cost that you pay for it. Normally, this is a $5.99 retail price point. We are putting this on a discount for $4.99 here at the event. And we do back it with a money-back guarantee. So you can give it a go. If you like it, you can kind of give it a try. If it's helpful for you, you're obviously going to keep it. It's well worth it for if it's going to help you make better trades, especially the fact that it's a one-time cost. So give it a go. Great little add-on. Lots of training that's included. Lots of hand-holding to help you get going. If you haven't used Metastock before, maybe you just heard about Metastock for the first time, I will say this. Metastock has been rated the #1 software in its price category. It's been rated that by the readers of Stocks and Commodities 31 years in a row. And if you want to try out the strategy number 4 with our award-winning Metastock platform, and you pay $4.99, we'll just throw in a free trial to Metastock. So that way you can kind of try it out. You can give it a go. You can evaluate it. And if it's something that isn't going to be helpful for you, if it's not going to work for you, get a full refund. Very, very high reward, low risk proposition. And I wish I could get that kind of a money back guaranteed on my trades. So take advantage of it. Give it a go. 800-882-3040, metastock.com/specialist trading A, or metastock.com/sales chat. So I want to say thank you for everybody for coming out today. If you're watching us on YouTube, if you're watching the recorded video, or just like, comment, subscribe, all of those things help a great deal. We appreciate it. Thanks for watching it. Have a good evening. Stay healthy. Stay well. We'll see you next time.